Ladies and gentlemen, good day and welcome to Maiden Forging Limited H2 FY26 and FY26 earnings conference call hosted by Kirin Advisor. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshil Ghanshyani from Kirin Advisors. Thank you, and over to you, sir.
Yes, thank you. On behalf of Kirin Advisors, I welcome you all of the H2 FY26 and FY26 conference call of Maiden Forgings Limited. From the management team, we have Mr. Nishan Kar, Managing Director, Ms. Shruti Goyal, Assistant to CFO. With that, I'll now hand over the call to Mr. Nishan. Over to you, sir. Thank you.
Thank you, Harshit. Good afternoon, everyone. Thank you for joining Maiden Forgings Limited H2 Financial Year 26 and Complete Financial Year 26 earnings call. We truly appreciate your continued trust and support in this journey of success as we strengthen our business across multiple segments and expand our operational capabilities. Over the years, Maiden Forgings Limited has evolved from a small establishment in 1988 into one of India's trusted manufacturers of bright steel bars, wires, and pneumatic nails. With more than 37 years of experience, the company today caters to industries such as automotive, engineering, infrastructure, hardware, defense, and consumer applications. Backed by advanced manufacturing facilities in Ghaziabad and a diversified customer base, the company continues to strengthen its market position through operational excellence, product diversification, and customer-centric execution. Through its unwavering focus on quality, reliability, and customer satisfaction, we have established long-standing relationships with more than 450 customers across diverse industries. Also, we continue to focus on expanding its presence in higher margin and specialized product categories while strengthening operational efficiencies and manufacturing scalability. Its diversified business model and ability to cater to almost all types of steel grades under a single window and provide tailored solutions to its varied customer requirements have positioned the company as a reliable and quality-driven manufacturing partner. Financial year 26 has been an important year for us, not just in terms of the growth achieved or operational capabilities added, or the expansion in our market presence, but the year marked laying of a strong foundation for long-term growth. You can say that Maiden Forgings Limited was listed at BSE SME on 6th April 2023. That's when this baby was born. Now, given the 3 years span post-listing, this year we nourished this baby with the best diet, taught it the skills required, and equipped it to be a warrior who is ready to take up the bigger challenges and emerge as a winner in the future. Now, before I throw more light on the above statement, I would hand over the call to Ms. Shruti Goyal, Assistant to the CFO, who would take you through the results achieved in pure numbers and data form. Shruti, I hand over the call to you.
Thank you, sir. I'm happy to present the financial performance of the company for the period under review with all of you present over here. During the year, we achieved our highest ever production of 35,546 metric tons, supported by better throughput, continuous process optimization, and sustained demand across key industrial sectors. Our strategic focus on enhancing the product mix, increasing the contribution from value-added products, and extending our presence across multiple business verticals enable us to deliver consistent growth despite the dynamic operating environment. The combined progress achieved across our three segments has directly contributed to our overall financial performance during the period, supported by improved utilization levels, better operational efficiency.
Sorry to interrupt, ma'am. Ma'am, your audio is not clear. There is some disturbance coming.
Yes.
Sorry for the interruption. Shruti, please reread the last para, the combined progress.
The
at a
combined
slow
progress
at a slower pace.
the combined progress achieved across our three segments has directly contributed to our overall financial performance.
It is not sounding
Just hold
clear.
on. Just hold on. Sorry, everyone. Uh,
I'll just
Sorry for the inconvenience interrupted. During the year, we achieved our highest ever production of 35,546 metric tons, supported by better throughput, continuous process optimization, and sustained demand across key industrial sectors. Our strategic focus on enhancing the product mix, increasing the contribution from value-added products, and expanding our presence across multiple business verticals enable us to deliver consistent growth despite the dynamic operational environment. The combined progress achieved across our three segments has directly contributed to our overall financial performance during the period, supported by improved utilization level, better operational efficiencies, and increasing contribution from value-added products. We reported H2 financial 26 with revenue of 122.60 crores, reflecting a growth of 17.46% year-on-year. EBITDA stood at 10.49 crores, registering a growth of 3.52% year-on-year, while net profit increased by 46.37% year-on-year to 2.93 crores. Consequently, diluted EPS for the period stood at 2.06, registering a growth of 46.10% year-on-year. For financial year 26, we reported revenue of 233.96 crores, EBITDA of 17.22 crores, and net profit of 5.02 crores, resulting in a diluted EPS of 3.53. These results demonstrate the benefit of our disciplined execution strategies in improving product mix, enhancing operational efficiencies, and our continued focus on scaling higher margin opportunities across B2B, B2C, and B2G segments. With this, I would like to hand over the call to Managing Director for his remarks.
Sir, I think you are on mute, Nishant sir.
Oh. Thanks, Shruti, for the insight. Now that the financial performance has been broadly discussed, let me circle back to the foundation laid during the financial year. A key contributor to this momentum has been the strength of our diversified business model across B2B, B2G, and B2C segments. Our core B2B business continued to provide stability through consistent demand from automotive, engineering, infrastructure, and manufacturing customers, despite there being a consistent volatility in the macroeconomic factors such as global tariff issues, frequent changes in the steel pricing, etc. Over the years, we have built strong relationships with OEMs and industrial clients by maintaining product quality, timely execution, and the ability to cater to customers across multiple steel grades and applications. This continued demand from our industrial customer base helped us maintain healthy capacity utilization and operational stability during the year. These strong relationships and goodwill created forms the first pillar to the strong foundation of MSL. The second pillar to this foundation is formed by the progress achieved during the year by our increased participation in the B2G and defense ecosystem. We initially strengthened our presence through registration with Ordnance Factory Board Kolkata, which marked an important step in establishing our credentials within India's government and defense manufacturing ecosystem. Building on this foundation, during financial year 26, we further expanded our positioning through registrations with Ordnance Factory Muradnagar, Terminal Ballistic Research Laboratory TBRL DRDO Chandigarh, and Center for Military Airworthiness and Certification CEMILEC DRDO Bengaluru. Alongside these registrations, we successfully executed and delivered orders for reputed institutions including HAL, BHEL, and NTPC, further reinforcing our credibility and execution capabilities within high entry barrier government-linked segments. With increasing focus on indigenization, defense manufacturing, and domestic sourcing initiatives in India, we believe B2G segment will continue to emerge as a strong long-term growth opportunity for the company. Now, Now comes the third pillar to this foundation, that is, our plans for overseas warehousing and stronger distribution capabilities, which are expected to improve delivery timelines and enhance competitiveness in export markets. This segment aligns well with our strategy of increasing value addition and building recurring demand across global consumer channels. For the same, during the financial year, we started laying the groundwork in Dubai in the month of February 26, which, due to war circumstances, got slightly postponed. But once geopolitical situations are stable, we plan to resume the work instantly and achieve the competitive edge in the international markets for the long-term gain of MFL. Now, finally, the fourth and the strongest pillar laid during this financial year is the steady progress on the development of our 4-acre integrated manufacturing facility at Modinagar, which will consolidate two of our existing units and significantly improve operational efficiency, scalability, and workflow optimization. Once operational, the facility is expected to generate annual cost savings while supporting higher production volumes and better throughput. As part of our long-term sustainability focus, the new facility will also include a solar installation aimed at meeting an optimum portion of our energy requirements, helping us reduce our carbon footprint while strengthening our cost structure over the long term. And the good news is that as we speak over this earnings call, we expect the new unit to be operational very soon, and already unit second shifting is going on effectively to the new facility, and the new facility is very much ready to move. Now, I would like to throw some light at the level of efficiency that we were able to manage while laying this foundation. No external capital has been raised during the financial year from any financial institution or in form of equity for this entire capex as well as the growth in the top line. Entire growth and capex have been funded through internal accruals. The credit rating of the company and its financial discipline has been completely intact while doing all these activities. Second, since April 2026, the shifting activity of the unit second to the new facility has been going on, and yet we have achieved more than 25% growth in the first 2 months itself vis-a-vis the corresponding months of the last financial year. This means that even during the shifting process, there is no hampering in the operations, and we target the same for the entire shifting process. Third, as we continue to grow, our focus on forward integration initiatives aimed at strengthening long-term profitability and expanding our product portfolio is very much on track, and we are prepared to introduce new product lines including GI wires and stainless steel machine components very soon post the shifting is completed. Fourth, alongside the development of the new plant and managing a decent growth in the H2 of financial year 26, we have also made the company prepared for the switch to main board from the SME, fulfilling all the criteria required for the switch. And at the right time, we would be making this transition. So in this way, we have created this strong foundation for the brand Maiden Forgings Limited, which was listed 3 years back on BSE SME by preparing a team and systems so efficient that they are able to make a fast-paced growth now, driven by innovation and rightly leveraging the assets at hand. Now, looking ahead, our focus remains on building a stronger and more efficient organization by scaling our manufacturing capabilities, deepening our participation across B2B, B2C, and especially B2G verticals, and expanding our presence in export and specialized product markets. The major growth would be led by innovation and transitions that would be first of its kind in their very nature. With ongoing investments in infrastructure, operational efficiency, and forward integration, we remain confident in our ability to sustain growth momentum and create long-term value for all stakeholders. I would like to close my remarks by confidently stating that we started our journey for making a company and creating wealth for all. But now our vision has broadened and we are focused on the path of creating a legacy. With that note, I thank you once again for your participation and continued trust in us. I now invite your questions on our performance, operations, and its strategic outlook.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Raj Shah from Shah Ventures. Please go ahead.
Yeah, hi. Good afternoon, sir.
Good afternoon, Rajji.
Yes, I have some.
For all the even future participants, I am comfortable with English or Hindi both. So whichever language you prefer, I will go with that.
Okay, sir. So what measures are being taken to protect margins during periods of sharp steel price volatility, sir?
So see, first of all, we are currently the positioning of the company, or say the overall structure of the company, is that we are a steel processor. We are not manufacturers. So whatever volatility is going on, whether it's a price rise or price fall, we are already hedged by that risk because we order our raw materials back to back as we get orders from the customer. So primarily, as a basic nature of business, our margins are safeguarded. But that being said, in case the market is constantly falling, which was the case till say November 2025, and before that, like one and a half year that went by. During that time period, the steel prices were constantly falling. So that in that scenario, slightly the margins get reduced because you have to retain the customers that are there and acquire new customers in a slowdown market. But fortunately, at the moment, that phase has already gone. Now the volatility is both upwards and downwards since December 2025. So that period you can say is a good period for us because the basic margins of ours are hedged. And on top of that, for last 5 months, let's say from January 2026, the products whose sales we have increased are all high value, high margin kind of products. That is the pneumatic nails, stainless steel bar, and alloy steel bar. So that is those are the products whose contribution has decently increased in our entire product mix. And in this financial year, particularly the 2 months that have passed by, those products have increased further contribution. So overall, for Maiden Forgings Limited at the current scenario, the basic margins are intact, and due to the product mix, they are on the increasing side. So I am very hopeful, not hopeful actually, we are targeting that during the financial year H1 and H2 of 26-27, we shall increase the margins in a very decent way.
Okay. Sir, as you said, hedging, that you are doing hedging, right? So I am also want to know that how you maintain inventory hedging strategies or long-term procurement arrangements to mitigate raw material risk.
See, we were earlier till say September 2025, we were almost giving an output of say 3,000 metric ton every month. Okay. At that time, there was almost a fixed kind of inventory level that was going on, plus minus 3-4%. That was the variation. Okay, maximum 5%. So that is almost like a fixed inventory for us, and we try to optimize it by reducing it alongside the sales increase. Then after that, it reached a level, I think from November onwards till date, it has reached to about 3,500 tons, 3,600 tons per month, right? So slightly, not exactly in that ratio, but slightly the inventories went up. Okay, because uh, especially in stainless steel, we have to maintain a longer term inventory, which is a very high value item versus the carbon steel or alloy steel. So that inventory is more or less kind of fixed. So if there is a jump in the prices, it increases like it happened in the recent times. Or if there is a reduction, it reduces. But overall, the buying and selling remains the same. So that is how, for example, today the pricing is 100 rupees of an item, the raw material price, and we have booked, let's say, 100 tons of order at 120. So if we need 20 rupees margin, we'll book with the raw material supplier 100 tons of raw material. So that way the 20 rupees for the day remains intact over the 100 tons. So that is how we work, roughly 5% plus minus. But overall, we try to maintain that model, and that is how the risk get hedged in this process.
Okay, okay, got it, sir. And also, I want to know that given the recent volatility in stainless steel and
Hmm.
alloy steel prices, what is your outlook for raw material cost in FY27?
Uh, that would increase, but the selling price will also increase. That is my estimate. Like, both the things will increase because there is shortage of nickel, there is shortage of multiple elements that are being used in stainless steel. So there would be scarcity, but there won't be an issue with the kind of volumes that we are doing. At that stage, there shouldn't be any, loss of volumes for us because we are working with at least five options as our vendors who are renowned and reputed, and we have been their long-term partners as a customer. So for us, till date also, there has been no issue in the supply line. Plus the increased price, that is definitely like that has to be passed on to the customer, and the customer is also accepting the same because they also know that they require for their manufacturing. Most of our customers are the end users, like they are the manufacturers themselves, so they can't stop the line. There is demand. It's not like there is no demand. So there is shortage of supply, but as on date, we don't think, Maiden Forgings Limited would have any such shortage of supplies because they have multiple options, multiple partners who have been working with us for say 10 years. 2016 we started with stainless steel business. So now it has been 10 years of relationship. So, and on top of that, we are a good paymaster. So obviously they want to, they prioritize us as a customer and we buy good volumes from them.
Okay, okay. And also, I want to know that what is the typical lag between raw material price movements and passing these changes on to the customers?
Sorry, I didn't get your question.
Yeah. What is the typical lag between raw material price movements and passing these changes on to the customers?
Okay, that, see, that is more or less hand to hand. Like, for example, if we have given a PO to the purchase order to the vendor, so they will supply me until and unless that purchase order gets over, they will supply me at that fixed price. Similarly, when the customer gives me a purchase order, I have to honor. So as and when the prices change, because see, stainless steel, that is the major, area where the margins can get hampered. So in stainless steel, the customer, it's kind of the current volatility has changes in the prices on a daily basis. But whatever purchase orders are there, we have to honor that. And against those purchase orders of the customer, we have already given the purchase order to the supplier at reduce at a fixed margin. So that purchase of ours is secure. So our margin doesn't get hampered. Supposing if new customer orders us today and the price has gone up, so he will give us at an increased price and we will also order it to the vendor at an increased price. Though we might take advantage in some cases, so in the rising price market, it's always beneficial for us actually.
Okay, okay. Got it, sir. Sir, thank you so much, sir, for giving us the highlight related to the business.
Thank you.
Yeah, that's all from my side. Thank you.
Thank you. Thank you so much.
Thank you. Next question is from the line of Radhika Jaiswal from Orient Capital. Please go ahead.
Oh, thank you, sir, for giving me the opportunity. So my first question is, what are your medium-term EBITDA margin aspiration as the contribution from higher margin products increases?
Hello, Radhika ji. Can you just
Hello?
repeat this question? I'm not clear, as to what you are asking.
Okay, I'm asking that what are your medium-term EBITDA margin aspirations as the contribution from higher margin product increases?
By medium term, you mean H1 of this year, H2 of next year? Within this financial year, we target that, the EBITDA margin that we are currently enjoying. Overall, it should go up by at least 1 to 2%.
Okay. Yes, sir. So, thank you, sir. And my next question is, what percentage of future growth is expected to come from volume expansion versus product mix improvement?
Sorry?
Hello?
Yes.
Yes, sir. So my next question is, what percentage of a future growth is expected to come from volume expansion versus product mix improvement, sir?
See, this year, let's say, ideally by September or October, 2 of our new products would be starting their commercial production. So their increased capacity would be annually around 9,000 to 10,000 tons. Okay. So you can say around, say, 20% of the growth is expected from the enhanced volumes. And that would also be, the increased margin, changing of the product mix from there. So you could say most of the sales will come from the new sales would come from, changing the product mix. And the volumes are increasing at a rate of, say, 5 to 10%. That will be ongoing process. Because see, now we are standing at such a positioning that we don't have to make much efforts to sell the products that are already with us, the basic products that we have been selling for 30 years. For that, we don't, the orders automatically comes to us due to the reputation, due to the branding, whatever you want to call it. And we are just making the efforts for the higher margin products and the new products that we are launching, which have a better value, and there is a increase of, value creation for the company as well as for the customer. So we are focused on that. So most of the sale has to come from there only during this year as well as in the future.
Okay, sir. So my next question is, what is the current utilization level of the pneumatic nails facility, and when do you expect it to operate at optimal level?
If I talk about the last month or last to last month, like from April onwards or March onwards maybe, we are utilizing it at 60 to 70% level now. The pneumatic nails.
Yes, sir. Thank you, sir. Thank you so much.
Thank you.
Thank you. Participants, please use your handset while asking a question. Next question is from the line of Vinit Thakur from Plus 91 Asset Management. Please go ahead.
Hi, sir. Thank you for the opportunity, sir.
Hi, Vinit ji. How are you?
I am good, sir. Sir, I just wanted to get some clarity on the H1 margins and the H2 margins, and what would be a sustainable margins going forward as well.
Vinit ji, like I said, I think Radhika ji also asked similar question, like what would be, in the midterm, what would be your expected increase in the EBITDA margin. So we are on an increasing side, especially after the new plant getting working. And I think we would be soon announcing, very, very soon announcing that the new plant is operational. So once that is there, it is, the margins are expected to increase tremendously. So
Okay.
if let's leave the H1 and H2 for now, because the tangent that we are going on within the H1 of financial year 27 also, like the current period. So we expect a vast improvement over there. And that would be the maintainable margins actually.
From H2, you're saying you will see a maintainable margin or from
Some impact
H1?
would be visible, very much visible in the H1 also as per my target and expectation both. So H1 of this financial year should see an improvement over the last year, and H2 would definitely be a good increase from the current margins.
So congratulations on the top line growth. If you could explain to me the economics of the new plant, like what will be the new capacity and what will be the peak utilization, and when could we reach the new utilization as well, like the peak utilization in the new plant as well, and our current plants?
See, I think we would have achieved around 73-74% during the last financial year, the earnings call that we are having for. That would be around 72, 73 or 74% of the utilization, right? Once we shift over there, seeing the order book value that we have, seeing the circumstances like how much recurring orders we are getting, the export orders we are getting, despite all this volatility in geopolitics, we are getting good orders. I think today our export order book would be the highest in the history as on date currently. So I expect that the current facility from say August or September onwards, once the entire shifting and consolidation is over, should reach around 85% level, which is, as per me, we'll try for 90%, but that is not practically feasible in India. So 85% level I consider to be a good level. On top of that, there would be an addition of capacity of 9,000 to 10,000 tons every year. So that capacity utilization would start say in October, around Diwali somewhere. So that would start. So in the next, because the products that we are launching, the galvanized wires as well as the stainless steel components, those are the products for which we just need to start the operation. We already have the LOIs from the existing customer itself. We don't require any additional marketing cost for them or marketing efforts for them as on date. So we already have the LOIs from the customer for both the product lines. So we expect that 2, 3, 4 months, whatever is the teething problem period, that should be there, and post that we should be able to utilize 85% capacity overall, which I expect you can say the for full year the impact would be in the next financial year.
Okay. So, sir, if just to reiterate what you have said, you are saying that you will be adding every year 9 to 10,000 tons per year going forward.
No. I'm just talking about the project that is ongoing right now.
Okay.
Okay, that would be fully operational by September.
Okay.
With the 2 products added, right?
Yes.
So 3-4 months is the period where we will be doing trials with the customers, establishing the quality and, starting our line of production for those 2 products, right? So the additional capacity that we are installing for those 2 products combined would be around 10,000 tons per annum.
Okay.
Current is 52,000, okay? And 52 or 53,000, and then it would be 62 or 63,000. So I'm just talking about the current setup that we are establishing.
Okay.
Which should be operational by September.
Okay, sir.
Okay. So I am talking just about this financial year and the next financial year.
So what are the current utilization? You mentioned around 70%?
70-73%.
So sir, 70-73%, the sales value should be around...
I'll tell you 50. I think we have total installed capacity of 53,000 and we have done around 36,000 something. So
Yes,
whatever, I think
35,000.
70%, I think. Yes.
So because of, okay. And sir, what would be our peak utilization of this plant?
It can be like without adding the two new products, just the consolidation part, not the adding of two new products. I think we can reach 45,000 tons.
45,000 is our peak. That would be around
Yes.
72%, if I'm not wrong.
Yes. Yes. Which I expect that within this financial year, we should cross a quantity, we should reach a quantity of about 42,000 tons.
Okay. So this would be this year's guidance, and then once we add the new capacity, that would be taking another year to scale up to full utilization, if I'm not wrong.
Not 3 months to 6 months, because those
3 to 6
products
months.
are already, we have the customer base, we have to just cater to our existing customers only.
And sir, could you
That
explain the
is
rationale
you can say that is a product that both the products have been, are being produced on customer demand.
Okay. So, sir, could you explain the rationale from going from bright bars to wires? So it's like a forward integration, could I assume? Like a forward integration?
No. We are producers of bright bars and wires. We produce wires from 1989.
Yes. So, sir,
It is
now your product mix.
a vertical, it is a vertical integration for us.
Okay. So, sir,
See, I'll give you an
Yes.
example. There is a market segment who is producing bucket handles, for example, or the hangers which you use in your home. Okay? There are
Yes.
two types of hangers that you use, or the bucket handles that you use. One is that is done over, जब आप एशियन पेंट की या किसी भी पेंट ब्रांड की बकेट लाते हो आप घर में, तो जो बड़ी बकेट होती है उसमें एक जो हैंडल लगा होता है वो जीआई कोटेड होता है. ठीक है. जब छोटी 4 लीटर वाली बकेट लाते हो आप तो वो पेंटेड होता है उसका हैंडल.
ओके.
वो एमएस वायर का हैंडल होता है, और जो जीआई कोटेड होता है वो भी एमएस का होता है, बस जीआई कोटेड होता है. तो मेरे पास वो सेगमेंट है, कस्टमर सेगमेंट, राइट. तो वो एमएस वायर तो टोटल मुझसे खरीद रहा था. आज जीआई वायर के लिए उसको मुंबई से मटेरियल मंगाना पड़ रहा है, महाराष्ट्र से मंगाना पड़ रहा है, नॉर्थ इंडिया में बैठ के.
गॉट इट.
तो दे साइड की भाई मेरा 200 टन या 150 टन लगता है भाई एमएस वायर, मुझे 150 टन से 200 टन लगता है जीआई वायर, तो आप ही देने लगो. And we did the reverse calculation. We saw the margins were far more better because North India में एक दो प्लेयर के अलावा कोई है ही नहीं प्लेयर.
So what are the margin profiles for GI wires?
It would be easily around 20%. 20 to 25%.
Almost double than what are current margins.
Yes, MS wire का तो definitely double, maybe triple also. Gross terms.
Gross terms. And okay. And sir, what was the realization for this year console level में? Around 65, 64?
क्या चीज?
Realization per ton?
That I'll have to track. I didn't saw that number. As of now, I don't remember that.
And so my other question would be, we were doing international, as you mentioned in the call as well, you were doing international expansions as well. Last we spoke in Dubai.
Yes, warehousing in Dubai, that was the that was the plan, creating a subsidy of Maiden Forgings Limited, 100% owned subsidy in Gulf, UAE particularly. I was there in Dubai. We also initiated the process from 9th February to 15th February, I believe. Then this war broke out, so we had to hold on for a moment. So we are waiting for the war to subside.
So sir, what would be our top line 3 years down the line? Like what are we targeting, or what would be our say utilization, or what would be target capacity by the end of 29 if I want to look forward?
Target capacity नहीं, जो हम अभी शिफ्टिंग कर रहे हैं ना, बहुत कंसोलिडेशन कर रहे हैं प्रोडक्ट सब कुछ कर रहे हैं. So we have acquired that land for the for next 5 to support next 5 years of the expansion plans. Okay, so the capacity will keep on increasing every year, because as per my target, we should reach 85% of the increased capacity by next year itself, in the next financial year itself.
Okay. So then you would need another
So
capacity.
yes, capacity, but the land would be available and in the same facility.
Okay.
So we have acquired the
So,
land with a longer term vision, not just the mid-term or small term.
okay.
So we'll keep on adding on, seeing, it is said that data is the new fuel. So we are using a very much data-driven approach. So I think what we do in 28, 29, I have already told you like what we are doing in 26, 27 and in 27, 28. I think that picture would be clear in the beginning of 27 or in the end of 26, 27.
Okay. So there are
Like
plans to announce more
our data,
capacity expansion.
maybe a new product line comes in. Okay, I
Okay.
also pointed on one very important thing during my opening remarks, that the entire thing that we are going to do in the future would be driven by innovation. So there are
Hmm.
many things, many development that are going on behind the scene. Which one will be executed both in terms of commercially, being viable as well as being a value creator basically. That idea would be executed, and let's go step by step, and we'll be. One thing is clear that this year the growth is going to be phenomenal. Whatever growth we have done, that is done. But this year it is going to be better. The next year is going to be even better. But what would be there in the next to next year, that I'll disclose only, maybe in the end quarter of this financial year.
And sir, just to get back on the margins wala part, because you said since we're going to 20% margin from GI wires and it will be live by the end of this year, so 28 would be the one where we will to see proper GI wires ka revenue, if I'm not,
Yes.
if I'm not understand, if
But
I'm not
with
mistaken.
that, I have also told you that this financial year is also going to see an excellent growth.
So sir, we will be able to reverse back to our FY25 margins?
We should be, maybe even better.
Okay. That's good to hear, sir. And sir, what is the peak utilization for plants like this? Like you cannot have more than go 75% or 80%. You know, a lot of steel
85%,
makers,
85 to 90% maximum.
90% के ऊपर हम by debottlenecking or anything we cannot do it,
नहीं जा
right?
सकते, वो चाइना वाला प्लांट लाना पड़ेगा भाई, मतलब चाइना वाला सिस्टम लाना पड़ेगा बिना ह्यूमन इंटरवेंशन वाला, तभी जा
And sir, last question would be just to get
मे
a
बी
light
हम
on.
वो भी लाएं, क्या पता 2030 में ला रहे हो, बट एज ऑन डेट जो हमारे पास मशीनरी एंड प्लांट है, दैट वुड बी सफाइस एट मैक्सिमम 90%.
And sir, अभी जो prices increase हुए थे अभी mid term Q3 Q4 में सबको expansion का
Q4 में
benefit
हुआ है,
मिला था.
Q2 Q3 में कुछ नहीं हुआ, Q4 में हुआ है.
Q4 में तो raw material prices were very low and whereas the commodity prices had increased by a lot. So I'm assuming H2 का जो margin gain था is because of that, or is it just because of our product mix and we were able to bet
No,
yeah,
majorly due to product mix.
not because of the raw material
मैंने बताया ना, ये देखो वो hedged है, वो somewhere hedged है, थोड़ा बहुत हो गया हो तो मैं कह नहीं सकता nominally, ठीक है. Our margins are more or less hedged until and unless we don't change the product mix, तो वो more or less hedged रहता है.
अच्छा, अपना रॉ मटेरियल इज ब्लू.
उसके अलावा भी देखिए प्राइसिंग बढ़ा, लेकिन मेरे अंदाजे से असेसमेंट से मैं आपको बता दूं, पूरा शायद ईयर तक ऑलमोस्ट 36,000 के करीब था जो टर्नओवर था. एंड लास्ट 3 मंथ्स में हमारी जो क्वांटम वाइज भी सेल्स हुई है मेरे हिसाब से, दैट वाज अराउंड 11,000 टन.
अच्छा.
So maximum output was, see what happens is we started this process of increasing the volumes, the efforts, additional efforts that we made from say last April, May, June. The impact started coming from September onwards, right? And then December, January, February and March went the highest. दो जनरल ट्रेंड भी यही है कि Q4 में बेस्ट होती है, बट उसके बाद अब कंटिन्यूस से आ जाए तो अप्रैल, और अगर मैं मई की भी बात करूं जो 2 महीने गए हैं अभी राइट, उसमें भी हम उसी रन रेट से चल रहे हैं, शायद 7,000 टन कर चुके हैं ऑलरेडी, जो Q4 का था मेरा कंटिन्यूस. तो डेफिनेटली नया प्लांट भी हो जाएगा सितंबर अक्टूबर तक, पूरा कंसोलिडेटेड फैसिलिटी, न्यू प्रोडक्ट इनकमिंग.
सो अक्टूबर में हमारी कैपेसिटी वुड बी अप्रोक्सीमेटली अराउंड
63. Q1 ही मेंटेन कर लिया तो Q3 Q4 तो बेटर होने ही है, Q2 Q3 Q4. राइट।
एंड अभी क्या रियलाइजेशन मिल रहा है सर हमको अभी Q1 में?
Q1 में तो यार 2 महीने करा ना, तो रियलाइजेशन तो अभी पूरा निकाला ही नहीं है ना, अभी तीसरे महीने के बाद निकालेंगे एग्जैक्टली।
Fair. And sir, going this suggestion forward, like if you could give always your capacity and utilization and realization, or at least quantum sales and production, that would be beneficial for us to also,
दे देंगे, कोई दिक्कत नहीं, दे देंगे वो हम
future
सेपरेटली
presentation if you
अनाउंसमेंट
could.
में दे दें। हाँ वो एक मतलब प्रेजेंटेशन जैसे मैंने इस बार भी दिया था आफ्टर March 31 कुछ, तो लेकिन
Yes,
उसमें
you
मैंने
had
यूटिलाइजेशन
declared the
लेवल्स
sales.
मेंशन करे, क्वांटिटी एंड आई थिंक टॉप लाइन आई डिक्लेयर्ड।
Yes.
तो हाँ उस वाले में हम नेक्स्ट टाइम से यूटिलाइजेशन लेवल्स भी देते हैं।
Yes. And sir, last would be my other income के ऊपर, sir, other income has increased by a
पर तो
lot.
वैसे भी हमारी जो प्रेजेंटेशन लेवल है वो भी अब मतलब सितंबर ऑनवर्ड इट इज गोइंग टू इम्प्रूव अ लॉट।
चलो, that's great to hear, sir. सर अभी जस्ट टू अंडरस्टैंड अदर इनकम इतना शॉर्ट अप क्यों हो गया सर, लाइक फ्रॉम 66 lakhs if I'm not wrong, it's around 2 crores,
सर
2.5 crores के आसपास.
मैं आई लेट यू नो दिस इन अ सेपरेट कॉल, ठीक है ना?
ओके
यहाँ
सर.
पे थोड़ा सा हुआ है तो आई लेट यू नो इन दिस सेपरेट कॉल, बट इट इज समवेयर रिलेटेड टू द B2G सेगमेंट होगी।
एंड सर जो अभी डिफेंस में हम कर रहे हैं, तो डिफेंस पे थोड़ा शेडलाइट कर पाएंगे, डिफेंस का क्या फ्यूचर है, क्या what are we looking forward, like we are entering into a lot of B2G segments and government has spent a lot of on the defense budget as well, so what are we targeting, and if we are, so what product would be targeting in defense mix, because we have got a lot of approvals as well, if I'm not wrong.
अगेन मैं दोबारा से अपने ओपनिंग रिमार्क्स पे वापस जाऊंगा। आई सेड दैट द फ्यूचर ग्रोथ वुड बी ड्रिवन बाय इनोवेशन। मैं एज अ SME प्लेयर, MD ऑफ अ स्मॉल कंपनी, कमोडिटी कंपनी, स्टील कंपनी, उसके क्या कहेंगे उस वाले माइंडसेट से नहीं कह रहा हूँ मैं वो चीज, बिकॉज वंस वी आर डन विद September, the new facility is over there, there would be lot more new things, and we got registered with DRDO, right?
Yes.
DRD अगर मुझे कमोडिटी बेचनी है ब्राइट वायर या वायर, तो we are not we don't need to register with DRDO for that. And where the mindset is what is required, we would be supplying that, we would be doing R&D over that. So there are multiple products that are going on. That's why I said that what next step we are going to do, which will give us growth in say year 28-29, financial year 28-29. That picture would be more clear in Q4 of 26-27, because there are multiple ongoing things, and the new facility would be able to support those research and development better. So the key area is we won't be, I don't think any of my investor would want that we should be a steel bright wire and wire company forever.
Hopefully future, so we do see a lot of potential in growth and a lot of better product mix.
Maybe in future we are called a defense tech company. There is a possibility, right? Not
Yes,
hopefully, definitely we would be seen in a different position, and the positioning and branding of Maiden Forgings, brand Maiden Forgings would be different.
Understood, sir. Thank you so much, sir, for answering my question.
Thank you.
Thank you. Next question is from the line of Vidhi Purohit from Phoenix Capital. Please go ahead.
Hello, Vidhi here.
Hello.
So,
Hello?
sir, I have a
Sorry?
question. Hello, am I audible?
Yeah, who is
Vidhi,
it?
request you to please use your handset.
Hello, am I audible?
Yes,
Please go ahead.
Yes. So I have a question, sir. Like, despite strong revenue growth in H2 financial year 26, EBITDA growth remained relatively moderate. But what are the key factors impacting margins during the period?
During H2?
Yes.
Well, I think one of the earlier callers asked me this, and I told them that the major impact in the margin shift, whatever occurred, was during the last 3 months only.
Okay.
Because of the change in the product mix.
Okay.
In the last quarter. And that is continuing in the first 2 months of this financial year also. Like in Q1, first 2 months have already gone. That is continuing. So the margins ought to improve this year in a decent manner.
Okay, and I have one more question. Like, could you provide the current revenue mix between like carbon steel, alloy steel, stainless steel products, and the pneumatic?
Sorry, I didn't prepare that as of now. So I can't, give you exact numbers, but definitely you can connect with Green, and I'll just, I think they would have done analysis, or my team has also done the analysis. I'll share it through a separate email to you.
Okay.
Maybe that's there in the presentation also. I think so.
Okay. Thank you.
Thank you. Next question is from the line of Riya Shah from Shah Consultancy Limited. Please go ahead.
Hello.
Hello.
Yes, sir. So my question is, you have recently secured a registration with OFP Mathura Nagar. So what revenue contribution do you expect from the defense and B2G segment over next 2-3 years?
Yeah, I expect that at least 20 to 20. I target that 20 to 25% of our sales should come from the B2G segment in the midterm future. Okay. So firstly that, and secondly, the Ordnance Factory Board, whether it's Kolkata or Muradnagar, they give us the credibility and credentials. Our product might not be used over there directly, but we have supplied last year to BHEL, NTPC, HAL, and I think one or two more organizations, B2G organizations, for the purpose of either defense or some infrastructure project. So that Ordnance Factory Board registration gives us the credibility to do so.
Okay.
So that is done for the purpose of credibility. So it's still the supplying to the B2G segment is entry barrier restricted area. It is having an entry barrier. So these are somewhere the gate pass. The registration with Ordnance Factory Board is the gate pass to that entry barrier. So that is why we got registered, and we are supplying regularly to the B2B segments now.
Okay. And can you provide an update on the order pipeline from the defense, aerospace, and PSG?
Again, I frankly didn't check that data as on movement, what is there. So for that, again, you can shoot a separate email to the investor grievance ID or to Green Advisors, and we'll be happy to respond to that with the exact numbers.
Okay, sure, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Harshal Ghanshyani from Kirin Advisors for his closing remark. Over to you, sir.
Yes, thank you. Thanks everyone for joining the conference call of Maiden Forgings Limited. If you have any queries, you can contact at research@kirinadvisors.com and info@maidenforgings.in. Once again, thank you everyone for joining the conference call.
Thank you, sir. On behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.